Hello and welcome to ATF TV. Today, I am delighted to say we have Jean-Charles Sambhor with us. Jean is the head of Global Emerging Market Debt at BNP Paribas and joins us today from London to talk about a familiar topic to ATF TV, Chinese fixed income markets. Jean, welcome to ATF TV.
Thank you. Good morning.
So Jean, first, what's the big picture here? What do Chinese fixed income markets have to offer to global investors?
Well, it's pretty ironic. So when you look at the big picture, it is the second largest fixed income market in the world, just behind the US one. And it is also one of the most underowned market. When you look at the share of foreign ownership of these Chinese fixed income markets, it's around like 8%. It should be much higher than that. So we think that we are at a turning point now. We think that we're going to see much more interest from global investors in this market. Why it is like such an appealing market? Because it is offering still at your very high yields in excess of 3% compared to a world of your negative yields globally. And also it offers like some increasing diversity benefit. Because it has very low correlation with other global fixed income markets, but also, of course, with the equity market. So the fact that it is a very large market, massively underowned by global market participants, with very low correlation with other asset classes is very appealing to us.
As the ATF China Bond Index has shown, real yields on 10-year Chinese government bonds have been consistently higher than those in developed markets during the past 5 years. What are the factors behind this?
Well, it's a function of like both your macro your story and also more like technical story. On the technical side, as I told you, it is like massively underowned market by global participants. So it means that the demand has been somewhat like subdued compared to other markets in the past, but it is changing now. We are seeing like very, very strong inflows to this market. So we see time there will be more demand for this market, which would translate into lower real rates in the medium to the long term. So that's on the technical side of it. But also on the macro side, you still have some very strong evidence that the Chinese economy is growing pretty strongly, and that inflation is remaining really subdued. So the combination of pretty strong growth combined with the overall low inflationary pressures means that real rates are pretty high compared to other global markets, both being developed markets or other emerging markets.
You make a very interesting point about China's growth. You say this is more dependent on internal dynamics than on other economies. Could you expand on this, please?
Sure. When you take a step back, you see that China has been the first hurt by this global pandemic, but the first one also to recover. And and this recovery has been driven by the external sector. Of course, we see that the net export contribution to growth has been overall pretty strong, and the current account surplus has been rebounding. But more interestingly, we see that domestic consumption has been also rebounding. So you have seen a clear disconnect between China and the rest of the world. We think that China will be the first country to fully recover. To some extent, it is already happening, but it's going to be even more the case in 2021. So what might look in other parts of the world as kind of U-shaped recovery is definitely look like a V-shaped recovery in China.
Thank you, John, for being here with us. That's all the question we have for you today.
Thank you very much.
And thank you, everyone, for watching. To read more about the Chinese bonds and its Asian emerging fixed income markets, check out asiatimesfinancial.com for the world's best news on Asian markets, economies, and more. I am Christine Zhou in London, reporting for ATF TV.